All right, everybody. Hey, this is Trader Travis. I have this is Trader Travis. I have my partner in profit, Peter, on the line. We're here with another stock market weekly recap where we can share our thoughts on the market, trades where we're at, and Travis can tell stories and tick people off and just jabber on a bunch of things. But anyway, jabber on about a bunch of things. Obviously, you can tell I haven't had my coffee today, so I can't even get my mind to think right. But I have, where is it at? Peter is like, that looks gross. I'm not going to talk about it because, Peter, I was drinking a green drink here. Peter's like, oh, it looks gross. And I was like, yeah, it tastes like wheatgrass, but we will talk about that another day.
Tastes like your lawn.
Yeah, pretty much, yeah. So everything we're sharing is for educational, informational purposes only. And that's a key point. I'm going to come back to that towards the end. Educational and informational purposes only. We're not trying to give you investment advice. We're not trying to give you handouts. Handouts make you always dependent on someone else. They turn you into a victim. Instead, we want to empower you with the knowledge that is in our heads so you can duplicate and model our success where you don't need us. How many trainers can say that? They design their programs so that you don't need them. Most programs I join, they actually design them so that you're always dependent on them so they can keep upselling you into higher and higher end courses. So with that, Peter's going to start covering his trades. I am going to end with a short story that I'm going to tie into a lesson going back to that, concept of empowerment and things like that. Kind of continuing my Tough Love Tuesday theme, but hopefully this week is not as tough of a lesson, but still trying to just show you the truth about what it really takes to build wealth and create financial independence. So with that, Peter, let me go ahead and turn the floor over to you. Make you
hey, I now have dual monitors, so I can.
Excuse me.
I know it's been a while.
Your go-to meeting stuff won't get in the way.
No, yeah, I needed to do it. So anyway, okay, so I will touch real quick on my SPY trade I used price point profits for my SPY. We'll go into great details, but we were just talking about that. If you're a member of the Success Academy and you don't know what I'm talking about, well, you missed out. Travis put out a great video on how to use price point profits, and so I do them. So I have price point profits on SPY. I thought maybe we were going to see a red weekly come on and I would be getting out of this trade, but it looked like SPY just did a nice little pullback below the short-term moving average and is bouncing right back up. So everything's looking good. So SPY is no problem. Coca-Cola was my other trade. I talked about it last week, and I talked about how I would probably lose money on this because I overestimated the move it had to make in the time frame I had, because it was a 60, at the time I think it was a 70 or 80 day trade. Right now it's got about 60 days left on it. And the big point I'm going to cover, and we talk about this in the Success Academy. For those of you that aren't a part of the Success Academy, you hear us talk about it. It's called a trade plan. A trade plan really is nothing more than your goals list or a business plan. It's really the same thing. But here's the number one thing, and I'll give you guys this for you that watch it for free. You'll get this kind of golden nugget. If you're not writing down your trade plan, it's really not a trade plan. It's just a wish list, right? If you're not writing down your goals, then they're just you're just wishing for things. You have to write them down. So I write down my trade plans. I actually use Microsoft OneNote to put my trade plan. So let's use Coca-Cola and how my trade plan really prevents me from being emotionally attached to my trade. So if we look at Coca-Cola, and you know what, let me just drill down to it like a 6-month chart. So I don't have a 6-month chart, so I'll drill down to 9 months, so it looks a little bit better. I got in. I can't remember exactly where I got in. I got in on a red daily. That was my entry point from Market Club. I can't remember the exact day. It's not important, but you can see Coca-Cola had 3 really big losing days and it dropped below its 30-day moving average. Some people use the daily moving average as their indicators as to when to get out. If I was using the DMA template, I would have exited this trade, but per my trade plan that I wrote down, I was using Market Club, which said red daily or 50% loss. So I didn't get either of those. So I looked at it yesterday and I said, tomorrow's probably going to be a down day and I'm going to end up just exiting the trade because I'll probably see a red daily come across, or maybe it'll get to the 50% loss. I wasn't really concerned about the 50% because I think yesterday I was at, like I was telling Travis, 19 or 21% loss. So it wasn't there yet, but it didn't matter. I wasn't emotionally attached. I was just like, over calculated the move it needed to make. I'll get out of it when I see the red daily. Well, look at what it did today. Today was earnings. Didn't expect that. And it jumped up. So now my trade went from 21% loss to right now it's almost at a 40% profit, which is awesome, right? So maybe this trade will work out for me. It's still got 60 days left. It's still got a ton of time and no telling what it will do. It may just kind of meander here at 54, which will be fine. But that was the big lesson here. If I didn't have my trade plan written down in the past, I can tell you I've made this mistake a million times. Travis and I talked about it. If I didn't have it written down, because in the past I didn't write them down, I would have gotten out of this. And today I would have been kicking myself because I wouldn't have followed my trade plan that was in my head and not written down. And I would have allowed emotions to dictate what I did. I didn't do that here. Travis always uses a big thing, and I'm going to use this, Travis. He always builds his trade plan as if he's going to lose money. I build my trade plan based on my max risk and what I can lose. I don't look at it the same way Travis does. I don't really build my trade plan expecting to lose money. I build my trade plan accepting to lose money. We know that, majority of our trades are losing trades. Based on what we teach you with risk management, it doesn't affect us because the winning trades always make up for it. So, but the biggest thing that I can't point this out enough, you got to write down your trade plan. And you got to do it before you enter the trade. That's what I did. And as a matter of fact, I'll go to it real quick. I'll read you my trade plan. I read this last week because this is what I wrote about Coca-Cola. What the heck is it? Here it is, it's way up here. Market Club plus 100 triggered a daily green on entry. Risk was $144. That was my risk on this. It's below my 2%, so I can take this to a red weekly or even a red monthly, as this trade has a lot of time in it. We'll evaluate each week. Right now, Coca-Cola looks to be taking a break in its run up. So I expect this to be a losing trade as I need it to move approximately 5% this month. Possible, but not likely. I may have overestimated the move it could make, but the risk reward was worth it. I was getting 1.5 to 1 odds, and it was well below my 2%. I said, however, as long as KO doesn't drop, I can ride it out and it's at break even right now. But my exit was a red weekly or 50% loss. Bottom line, when I saw those drops, I just stuck to my game plan. It's working out. So that's it. I think I beat that horse enough. Hopefully you guys get the point of why it's important to write your trade plan down so that you're not emotionally attached to your trades. And, Travis talks about that all the time. You cannot be emotionally attached to your trades. And if you are, it's going to hurt you. So it's not always easy to do, but a trade plan prevents it.
Yeah, I struggle with the word when you say you cannot. It's like when you tell somebody, easy to say, hard to do. So we would say, well, I would say it this way: you can't be successful, and then what was the word? Did you say? Oh gosh,
you should try not to get emotionally attached.
There you go.
Instead of you cannot. Try not to get emotionally attached.
Try not to get emotionally attached. If you want to use the word cannot, we will say that you cannot be successful and emotionally attached to your trades at the same time. You could do one or the other, but not both.
Right.
Sort of like the quote, you can make excuses or make money, but you can't do both. Anyway, so it's something like that. You can either be successful or emotionally attached to your trades, but you can't do both at the same time. So, all right. So
that's it. That's
all right.
Perfect.
Okay. So go ahead.
I was going to say I will. Let me
give me back controls.
Yep.
Okay. So what I want to do now is before I share my screen, Peter said something. Oh, I was actually placing trades while you're talking on KO. I'm like, PR template setup is coming up.
I know.
So I just placed some cash flow trades on KO as Peter was talking. Um, Now, I didn't wait for follow through per the PR template, only because as a credit spread, I'm selling time. I don't really need the stock to move. So I guess that's how I justified it. But there's really no justification for breaking the template. So for the highest chance of success, wait for the follow through per the template. I just took it's a breakout on higher volume earnings. I don't see any reason the stock could crash. So I placed a trade. But as always, like Peter said, I'm kind of a loser, pessimistic DNA. I don't know. I plan to lose money on my trades. So I actually placed them assuming they're not going to work out. And I was telling people I was struggling with, why do people get emotionally attached to their trades? I was like, I don't. I was just like, whatever, I move on. I was like, maybe because I go into it expecting to lose. So when it happens, I'm like, that's no big deal. That's what I planned to happen anyway. So it's like, what I planned to happen actually happened. What's to be emotional about? The way I think about making money is, if I make money, it's just a bonus. Focus on risk first, profit second. When I do that, the profits usually take care of themselves. Compare that to how I used to trade in the beginning. Remember, I took 10 grand and 70 grand in 2 months. Why did I do that? I didn't do that focusing on risk. You can't grow an account that fast focusing on risk. You grow an account that fast focus on making money. I was trying to make money. So when I place trades trying to make money, I have found that that's when I get emotional, because what I expected to happen, i.e. me making money, when it doesn't happen, I get crabby, right? When the trade goes against me, I get crabby. Why? Because my expectation was I was going to make money. So over time, I learned to trick myself. Forget trying to make money, Travis. Let's plan to lose money. Adopt some loser DNA here. All right, plan to lose money. So now when it happens, I was like, I don't struggle with it. I'm like, Now, do I get emotional every now and then? Of course. I put that in the members area. You'll see it in my trade journal Excel. Every now and then you'll see emotional exit. I got crabby. I took my profit, blah, blah. But for the most part, I don't struggle with it. It's like, whatever, it happens. I move on. I generally make up the money. Now, with that being said, let me go ahead and show you my screen there. Oops, wrong account. Before I show you my screen, let me pull up a different account. Now I'll show you that. I was like, I don't want to show you that account. It's my personal account, the contest account, which is a funny story there. Talking about risk, I'm gonna go ahead and confess it here. Can you see? Does it see TMRT and MC?
MCO.
Okay.
Yeah.
I need to change that. It's no longer 10-minute retirement trader. We changed the name to 10-minute income trader. So, yep. So I'll change that. Speaking of risk, a confession here. I wasn't going to share it because it wasn't a big deal. I am in the U.S. Investing Championship right now. We talked about it. I was up 40%. The reason, and I wasn't even going to cover this, but we'll go ahead and roll with it. Peter talks about his Macy's trade. We got to pick on him sometimes because he made a mistake. He didn't insure it. Macy's crashed in price. And I keep telling people, I'm like, Peter's Macy's trade has nothing on the mistakes I've made, right? I just don't talk about it anymore because most of them are in the past. But I just made a mistake in May when I went on a cruise. I haven't told anybody this, but my little cruise was the most expensive cruise I ever took in my entire life. Why? Because this idiot decided to load up on his trades and his pure ego, load up on his trades in his investing championship account, trying to double my account. I got caught up in ego, then took a cruise. What happened in May, everyone? The market had a pullback, right? So guess how much I lost in May in that account? $30,000. Oh. That was the most expensive cruise I have ever taken in my entire life. Why? Literally, the market started falling the day we shipped off on the boat. Yeah, of course, I had sketchy internet, things like that. So I'm like, never doing that again. Of course, I broke about every rule. The risk rule, 210 formula, don't place trades when you're on vacation. I broke every single rule. I was like, okay, Travis, why don't you trade this a competition account like your 10-minute income trader account? You would do just fine, right? You doubled your money anyway, trading conservatively. And that's what I did. I actually did that. So, and I didn't lose 30 grand. Let me say it this way. I gave back 30 grand in profit. The account was still up for the year because I had done so well. So I just gave back some profit. Good news is I corrected my errors. I cashed out all those high risk trades, got back in with the proper risk amount, following 210 formula, made the money back and some. So as of now in this recording, that's what I was looking at before I showed you my screen, is I had that account pulled up and I'm back.
You got to still be in first place.
I don't know. They're behind on the results
What's
because I was
your
like,
what's
hurry!
your
I was like, hurry up and update the results. They still have my bad month up there. I'm like, I don't want to see that. It looks pitiful,
but,
right?
but what's your return at now?
40 something, 45, 50, something like
Well,
that.
see, in that second place, the last time you showed it was at 8%. I'm pretty sure.
Well, I don't know. Some new guy just jumped up and he's doubled his account. He's in the same category as me, high
Uh,
risk option trades, which I know if he's doing that, he has to be trading aggressively, which is fine. No judgment there. So I don't think I'm in first anymore. Two, I'm excited. I want them to hurry up and post the results because they said they're going to do a press release and post the results in Investors Business Daily. So that'll
oh,
help
cool.
with streets cred there. And I was like, I can't wait because I want to see that. But anyway, so I guess that little grass juice I drunk is giving me a scratchy throat there. I might need my water again, my big
I usually
water
get
jug.
I usually get a scratchy throat when I mow my lawn, so
Good one, good one. All right, so let me move on here. I won't have the general market. We won't cover today. How about this? We'll avoid it. It's still going up unbelievably. Peter actually already touched on the general market. What I want to do is, I don't know how long have I been talking. I didn't mean to go into that story there about the cruise, but some of you find it useful. I still make mistakes. I'm confessing it. I've corrected it. That's what you have to do. Own up to your mistakes. Just correct it moving forward. Everything usually works out in the end. I'll try to shorten this story here to follow up again on a Tough Love Tuesday. I went through college, and actually, let me stop showing my screen because I don't need to show you this anymore. So let me pause that. All right, so quick story about me going to college. I don't think I've only shared this before, maybe once. I don't share it often because I don't want to give people permission, or I don't want people to think that this is okay. There's nothing okay about what you're about to hear. So when I got out the military, I went to college, right? Why? You supposed to go to school, get a job, get good grades, blah blah, right? That's the same. I was programmed with that. And so even though you getting out the military, I didn't need to go to college. I could have got a good government contract work and been fine, but I felt insecure because I didn't have a college degree, because you're taught that that's what you need, right, to succeed in life. Plus I had the GI Bill, so I'm like, well, it's gonna be free anyway, so it's no big deal. But I still got a job, so I worked full time and went to school full time the entire time in college, right? My parents didn't pay for college, as a matter of fact. Anyway, I won't tell that story. I was about to talk about my mom, how she didn't support that either. But anyway, so I went to school full time and worked full time all through college. So here's my schedule. It took me about 45 minutes to get to school from my house. I was living with my mom at the time. So Tuesday, I got up about 8 a.m. to get ready for my 9:30 a.m. college class. I stayed in classes from 9:30 to 5:30 p.m., right? Then it took me another 45 minutes to drive to work. So I drove to work. I worked, I forgot the shift they called it. I don't know if it was night shift or swing shift, but regardless, I worked from 7 p.m. to 7 a.m. Right. So Tuesday, I got up at 8 a.m., went to school all day. Then I went to work from 7 p.m. to 7 a.m. Wednesday morning. What did I do Wednesday morning? Did I go home and go to a nap? Nope. I had to drive 45 minutes back to school. I started classes at 8:30. I finished my classes at 5:30. Took another 45-minute drive back to work. I worked from 7 p.m. to 7 a.m. Thursday. And then at that point, I'd go home and take a nap until my 1 p.m. classes. So if you're following me, I got up Tuesday 8 a.m. I did not go to sleep again until Thursday 8 a.m. I did this I wrote it down here. I held that schedule for 4 years. 4 years, I went 48 hours without sleep every single week. That's why I don't share it, because I don't want people to think that's okay, because it's not. Everything I've studied about health and sleep says you knock years off your life. So I told my wife, I was like, I'm probably gonna die earlier than I should have died because I sacrificed my body like that. Not only did I sacrifice sleep, guess who got fat? And when I say fat, I literally mean morbidly obese. I'm 5'3". I was weighing close to 200 pounds, like a little penguin waddling around the campus. Dating life suffered. Who girl wants to date a guy like that, right? So we won't even go into all that. Drive by McDonald's. You can't go home to cook, right? So I'm driving by McDonald's, getting a steak and cheese egg sandwich for breakfast every morning. ate burgers and fries at my job. They had their own cafeteria there. I completely destroyed my body for 4 years. Now, why am I sharing that? It has nothing, you think it has nothing to do with the stock market. It actually does. It's a story of sacrifice, right? Doing what you have to do to accomplish what you need to accomplish. During that time, on top of that hectic schedule, that is when I built my real estate empire. Remember, my school was free. The reason I was working was I was stacking away all my cash. I was living with my mom. That didn't help the dating life. I even had people tell me I was a loser still living with my mom. But I stacked away all that cash, and that's what I used to buy my first rental property, and then I compounded it from there. So on top of all that, I sacrificed to build my real estate empire. All right. Now, that same theme of sacrifice, doing what you need to do to succeed, when it comes to finally learning about the stock market, after my real estate investments all failed, went bankrupt, I had to do the same sacrifice. I was broke. I decided, oh, let me learn about the stock market finally. Now that I'm broke, real estate didn't work for me. Well, it worked. I just was stupid and over-leveraged myself. Hey, 210 formula, people, focus on risk first. No, I focused on making money. Totally forgot all about risk. That's why I went broke in real estate. So when it's time to learn the stock market, maxed out credit cards, I'm living off credit cards, I have no money, great strategy, coach, millionaire mentor, but I have no money. You tell me I need to start with 10 grand, I don't have it. Well, what is a successful millionaire mentor going to tell you to do? Are they going to be like, oh, it's okay, No, they're going to be like, find a way. If you really want to succeed, you'll find a way. Don't use an excuse, a loser's limp. You're using an excuse. Are you the only one in the world who's ever been broke? How do you find the money? So he's right. I sold my furniture. I got rid of my car, sold my extra car I had. I had a BMW, and think about that. I'm broke, but I have a BMW. I'm putting more effort into looking rich than actually putting effort into being rich. So the BMW, I brought in 8 grand cash, sold all the furniture, brought in about another 2 grand. That's how I got to 10 grand to start my trading account. And that's that 10 grand I took to 70 grand in a couple of months. All right, so same theme there, sacrifice. Now, next theme here is, what do you notice in both of those stories? Is that Travis never discovered a push button easy way to succeed in life. Never. Don't believe me, I have searched for it, and I've been searching for it for years. Never discovered it. My millionaire mentors never gave me one. They all gave me a blueprint that required some work and effort on my part, right? Every time I would get turned off by the work and effort. I didn't want to study. I didn't want to watch the videos. It was like, oh, whatever. I go off in search of, quick and easy. Every single time I get burned, I get scammed, blah, blah, I'd come back to my mentor and his work blueprint. He's a millionaire. Why wouldn't it didn't dawn on me. Let me just follow what this guy's teaching me. Maybe I'll be a millionaire like him. The end of the story, obviously, if you're listening to this, is I did follow it and I did achieve the same level of success he did. It's a repeatable blueprint, right? 2 themes. Do what you need to do. Both themes require sacrifice. Both themes require work. There is no push button easy way. That leads to the whole empowerment, educational thing I talked about, and I kind of alluded to in the beginning, is we have this concept. People, I've struggled with this, trade alert services, right? You think that you can join a trade alert service and you would succeed. It makes sense. Travis is successful. Let me just model his trades. I will be successful too. Let me just not model, actually copy his trades. Let me get into the same exact trades as he will. But I want to finally, hopefully, cure this disease called trade alertitis. All right. First, Peter, is it possible to succeed without copying my trades?
Yep.
Okay. So what I have found is that you convince yourself that you need to copy my trades in order to succeed. And I want you to think about this. Trade alert services often, not all the time for everybody, but they often turn into this. I want to get rich with little to no work on my part. Trade alert service equals I want to get rich with little to no work on my part. Because the person offering the trade alert service, they're the ones doing all the work, the research is that. They're just handing you trades. So is that a fair assessment, Peter? For some people, it's I want to get rich with little to no work on my part.
Yep.
Okay. And I just gave you those 2 stories because I never found a way to get rich with little to no work on my part. That's how I know trade alert services don't work. I want to cure that disease. Please get rid of the notion of you think you can succeed that way. I have not found a way to make it work. Evidence of the fact, do you know any millionaires, gurus, people who promote online? Have any of them you've ever met said, I turned 10 grand to a million in a trade alert service? Have you, Peter?
No.
No, but people don't pay attention to that. So I can't get into all the reasons, assumptions, honestly. I don't know why they don't work. I just know they don't work. So that's why I don't promote them. I do promote the proven blueprint my mentor shared me, but it does require work on your part. So I don't know. I hope that wasn't as tough as last week's message, but I definitely want to hammer in that theme. We have to put in some effort. It's well worth it. It's a little bit of sacrifice. And then from that point, for the rest of your life, you can extract money from the market left and right, clicking buttons. I just shared with Peter before we started recording. I showed Peter how my house pays my mortgage. I don't pay it. I was like, I'm not paying that. But again, it took me putting in the effort to learn all that stuff to get to that point. So anyway, that's a very long recap, but I hope you found some value in it. Any final takeaways, Peter?
The only thing I was gonna add on with that, people think that trade alert services are actually easier, but in reality, they're not, because you have to spend money, and that money comes from you going to work or doing something that probably isn't easy or something you don't like, which is why you're trying to get out of that path. And what ends up happening is you just are stuck in this endless cycle. The trade alert service never gets you out of the employment required to pay for the trade alert service. So it's actually harder than you think. You think it might be an easy way.
Yeah, you think it's easy.
And I only know this because I did it. I
Yeah.
used to subscribe to this one guy who would put out recommendations on stocks to buy and everything. Unfortunately, I couldn't really follow him because you needed to have like $400,000 or $500,000, and I'm thinking, geez, if I've already got that kind of money, I don't really need you. I'm just gonna pay a hedge fund manager to do it for me. But and then it turned out even he wasn't really that successful. And by the time I got the newsletter to get out of trades, the stock, he lost like maybe 3 or 4%. I lost like 12 or 14%. It was just, it doesn't work unless you're sitting there. The other side of it too is, for me, it is kind of, I never wanted to go, I always think about this. If you become successful at this, and I am successful at it, the last thing my brothers and sisters ask me about it, the last thing I want to tell them is, when they say, how are you so successful at it? The last thing I want to say is, I just copy off Travis. He does all the work, and when we take the test, he lets us see the answer.
Right.
It was just not something that I wanted to be. I don't want to be that kind of person. I wanted to be the kind of person that said, well, it took me years. I mean, I really didn't want it to take this long, and it doesn't have to take this long, but it is well worth it when you can one day say, I've been working on this for a long time. I'm still working on it. I still make mistakes. But look what I have to show for it. It's just a great feeling. When something comes easy, it's not a great feeling.
No. Every successful person talks about that. The things that are the most hardest to acquire are the things you cherish the most. They give you a sense of pride in yourself. Versus, you're right. Oh, I cheated. It develops low self-esteem. You don't feel good about yourself because it's not you. Yeah,
right.
It's not you. It's the person. Is the power is another person. I want you guys to be powerful, guys and gals. Sorry. All right. I don't want to end on that note. I actually, as Peter was talking, I was like, let me end on a more positive note there. I'm like beating people up 2 weeks in a row. So what you're looking at here, I want to give you all something who are not members, other members. This will be a reinforcement, but even though I was struggling to catch up, it should help you here. All right, what you're looking at is a trading for a living case study. New case study I started this year, showing people if you were trading for a living, here's how you would do it. Started with about a $300,000 account, 350. It's down about 687, so it's almost doubled in price, 95% growth. Now, the thing about this case study is different than the 10-minute income trader. I did not add any money to the account. 10-minute income trader is showing you 5-year retirement plan, how to take a 10 grand account, turn it into a six-figure account in 5 years less. This account is, okay, I've already got a 6-figure account. How do I grow it, protect it, live off of it? So 95% growth without adding any money to the account. That's all investment performance. Here's what's else. I traded one stock. It's called the One Stock Blueprint. So I'm showing you this is motivation that you don't need a bunch of stocks. You can trade one stocks. You can increase your account. I can't guarantee SEC laws, disclaimers. I can't guarantee you'll be able to do this. These are my results. Are not typical. Yada yada yada. But and this is also definitely not typical. I usually don't get 95% growth. I think the most I've had in the recent years is about 60, and Peter saw that, and that was in 2013, I believe. So this is unusual for me, but I appreciate it. It's here, whatever. We'll know. I don't know what next year will bring, but this does show you that you can actually just trade one stock and do very, very well. Here I have up here Buffett strategy plus profit accelerator plus rental income. For those who don't know, this is for people who aren't members. Again, the one stock blueprint. Oh, the reason I'm showing this, I realized the other week, I'm total scatterbrain. I talked about my wife said she was leaving me in 2018. Right, market went through correction. My marriage went through correction. Oh, my stepdad died. All this other stuff. So crazy, right? So I never let everybody know how we're doing now. I was like, oh, Travis' wife is leaving. He doesn't talk about it anymore. I was like, oh, I was like, duh, we're fine now. She asked to go on a date with me. We attack each other in the bedroom, so we're fine. But the reason I'm sharing this one stock blueprint with you is good things can come from bad situations. So if any of you all heard me say in the beginning in January is I said I only want to place one trade a month. I don't want to look at the market every month. Why is that? When your marriage is in trouble, you don't keep pouring yourself into business and making money. You take care of your business. You focus on your marriage. Well, that's going to take attention away from something else, the stock market. Problem is I didn't want to sacrifice my income. So I was like, how can I still get the income and focus on my marriage where I need to do? The one stock blueprint, one trade once a month, 10 minutes. That's it. I have no excuse now. I have the free time now to focus on my wife. So you can thank my wife for the one stock blueprint. Say, yeah, you should tell him you're going to leave him more often. He comes up with good stuff when you tell him that. So that's where that came from. So, you can look at challenges and get poopy about them, or you can turn them into what they say, turn lemons into lemonade, things like that. So Buffett strategy. Anyway, here I was going to tell you the strategies, but it's going to make this too long trying to explain these strategies. But for those who are members, if you have any questions on what the Buffett strategy is, profit accelerator, if it's not clear, just please ask me in the members area. I'll clear it up so you can understand what these strategies are. So with that, now I will stop because this is one of our longer recaps, Peter. But I pray that people found much, much value in this. That's it?
Yeah,
all right.
Me too.
All right.
You said it was long. I didn't want to say anything else.
Right. We'll make it even longer. All right, everybody. You all take care. We see you next week's recap. All right. Talk to you soon. Bye-bye.
Yeah.